Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny. And holy crap, did Apple, my largest holding, my favorite stock, move the whole entire goddamn market this week? We're going to talk about the earnings. And we're going to talk about the S&P 500 earnings overall and look at the charts real quick in the market update video.
Balls.
Two Stupid Guys Trade Stocks.
All right, my man. Pay attention to this background here. It's going to come up again in a couple minutes. But
Okay.
so Apple moved, they're up 4.69% the day after they reported earnings. Okay. Now, yeah, all right, that's not an enormous move compared to some other stocks, which can be up like 10, 20% the day after earnings. Let me put this in perspective for you. A 4.69% move for Apple, a $2.75 trillion market cap company, was $129 billion in additional market cap. All right. That is the size of freaking Starbucks in a goddamn day.
Yeah, it's disgusting. I really didn't think they were gonna do that well.
Yeah, I figured this is like this these facts just kind of like completely blew my mind. Like the same thing, their gain of market cap in that one day will make it a top 100 company globally.
Yeah, they're like too big. I think eventually people are gonna get tired of buying the same iPhone every year, but you never know.
Yeah, you know what's funny? Like, listen to the earnings call too. It definitely has a very different tone from other companies out there. This is the walk softly but carry a big stick mentality because they don't get out there and like hoorah rah all this kind of crap like that. They just like are quiet professionals, just like crushing everything else. It's insane, and they try to do it in a way that's almost like it's so sneaky that it's like mischievous. If you get my point here. They try to
Hmm.
be such a good guy that they're actually screwing you.
Yeah, I mean they're definitely not good. I mean I don't think there's any. I mean if you look at where their phones come from, not their phones, all phones. Just be
Yeah.
clear.
Yeah. So, I mean, the headline stuff here basically, you're talking about $95 billion almost basically in revenue in the quarter, down 3% year over year. They actually said it would have been up on a constant currency basis. The quarterly earnings they delivered were flat, 152 versus like 153 last year. So their EPS they were able to turn in despite the changing macroeconomic environment was still pretty good. The other thing that you kind of notice compared to other S&P 500 kind of companies is they haven't had quite the profit squish. They've been able to actually maintain their margins better than many other companies, which has been kind of cool to see. Um, as far as the kind of tone of the call, we're going to talk about record. Record comes up quite a few times. I actually counted how many times it came up for you. But they are just crushing away, and that they have these kind of longer term goals towards being a little bit more environmentally friendly and that sort of thing. But I think they are, how do I put this? They're hitting the ESG talking points, and it's not something that I think per se matters in the short term. But as you see more ESG kind of investing on the rise, it is something that you have to stay ahead of in order to be able to kind of continue being that dominant power, if you will. Now, in terms of where the dollars hit the road, this is what the part that really matters. Operating cash flow, $28.6 billion, of which they returned $23 billion to shareholders this quarter. All right, sexy numbers.
Yeah,
Yeah,
jeez.
and you saw this kind of leak out the day before that Apple's board had authorized an additional $90 billion in share repurchases.
And raising the quarterly dividend for 11th year in a row.
Yep. Yeah, exactly. Dividends still not like a huge part of their business as of right now. They're really
Right.
more focused on share buybacks. Their ultimate goal, they said, is to become cash neutral, basically, in order to have their net cash position to be approximately zero. Right now, I think they had 160 something $billion in cash and like 110 $billion in debt, meaning they're about a 50+ $billion net cash positive position. So they're still trying to return and work through that backlog of cash towards turning it towards shareholders. Um, Now, from the conference call perspective, I just finished listening to it this morning. The word record was said 30 times. Can
They,
you imagine?
I
Yeah, go
mean,
for it.
they're insane, right?
Yeah.
But did they talk about? I can't remember the number. I wish I had looked it up before this, but just the money they get on cloud services for storage.
They did a little bit. They actually would talk a little bit how that's an area where, although they're growing, they see significantly more opportunity because their install base, the number of people kind of starting to use Apple devices is growing faster than the services kind of revenue at this point.
Right. Because I
So
mean,
you
you would
think
think that catches up.
exactly that's what he was saying is that there is a great untapped opportunity. That was one of the questions that someone asked Tim Cook about, and he was like, "Yeah, he's like, we obviously always strive for better, and we certainly think we can do better, particularly in that aspect of the business." So, like I said, record is 30 times. We're talking about all the different segments that we're hitting record revenue, right? And the emerging markets is becoming a bigger and bigger theme. And that's why I put that kind of image as the background of the thumbnail here, is that you have the first two stores in India that opened just a couple weeks ago after this quarter closed, actually. Um, and India in itself is something I've talked about a little bit before, how like I have much greater optimism for their long-term economic outcomes than I do for China, whereas India has much more service-oriented economy and has better aspects as far as like, trying, being English speaking and having better access to the rest of the world in terms of providing services than China does. So I am really, have been thinking about and hoping for a good India play. And I'm actually starting to think that Apple may actually be an India play, which is kind of cool.
I'm looking up the India population. Oh, okay.
Yeah.
1.4 billion, if you're wondering.
So their middle class is, kind of anticipated to be almost 600 million people in the next few years, beating twice the kind of population in the United States as far as like a middle
jeez.
class.
That's
Yeah.
insane.
And like, they're just literally opening the first two stores there. All right. And as far as a continued forward guidance here, they said basically a similar quarter is what they're thinking for June. Now, this is a slide right here about the kind of India and their kind of population dynamics a little bit. Yeah. So this is a percentage of households. Now, I can't exactly translate the unit of currency here, but this is how they broke it down. This is from an Indian publication. But this is kind of where the outliers are, or the kind of the dispersion, I guess you could say, of Indian citizens amongst as far as like income goes. And you see they have a pretty large group here in this aspirer segment that they called. As more and more of those people move into the middle class, they'll be able to adopt these more premium products like say a company like, I don't know, Apple maybe has to offer, which is why it's not surprising that they're putting an actual physical presence in that country.
I mean, look, it's a huge market, a lot of people. I know literally nothing about the stuff that they use. I'm assuming they have their own cell phone companies and brands.
No idea as far as that goes.
Me neither.
Yeah, no clue. But if you want to look at the actual financials here, that they put it out a very nice, clean, concise balance sheet. But as far as like the revenue goes, not terribly off from last year. Like they were saying, basically was 3% down. On a constant currency basis would have been a little bit better. The product mix here moving a little bit more towards services. That's a segment that's growing faster. They're getting a little higher profit margin from that. That's why they're still able to maintain this pretty solid profit margin. As far as what their expenses are, this is always nice to see. We see so much corporate bloat. Like Dylan and I do look at a lot of like corporate kind of reports. Look at this selling general administrative expense line here. 6.193 billion last year, 6.201 billion this year. Barely moved at all.
Yeah, that's nice. That's the opposite of Netflix. I can't remember.
Every other company.
Yeah.
The corporate bloat is such a thing. So they did spend a little bit more, but they spent a little bit more where it matters, right? 6.3 billion in R&D last year, $7.4 billion in R&D this year. Yeah.
It is, this is not really what this presentation is about, but Apple, like when the iPhone came out, it was like a revolutionary, like, holy crap, right? In my opinion, it's almost kind of like a Tesla car. If you drive a Tesla car, it's like this makes all other cars stupid. Not talking about any other aspects of the business. I would really like for them to do something again. Like, I feel like Steve Jobs did like so many cool things and like built this whole thing, and then Tim Cook is like, all right, iPhone 15, change one chip, 10% faster. Like, it's the same thing.
I think that misses a large part of the evolution you're seeing happening here in Apple. Did you think about the fact that they launched a high yield savings account a couple weeks ago?
Yeah, that's wild. That's interesting. Also, absolutely should be in there. If your money's in Chase and you're getting 0.1%, see your bank fraud video. They're making a lot of money off of your 0.1%, just so you know.
Yeah, exactly. I mean, Apple's is what, 4.25% APY, and they're partnered with Goldman Sachs, Barclays kind of product, and they're actually paying a better yield than the Goldman Sachs one is on their own product, which is it's fascinating to me. Just the leverage Apple has. and you're definitely seeing them move more into those services, into like kind of credit card processing and things like that. That was one of the records he talked about, is that segment. They didn't parse that out individually, but they said that was a record
Yeah.
for them.
I mean, that
And
is
that,
pretty cool.
yeah, exactly. It's not quite the iPhone revolutionary, but their products are becoming so invasive in your everyday life. It's hard to like not have contact with them. And then they were able to deliver, despite the fact they had a little shrink in revenue, they were able to deliver nearly similar net income here, which is sexy as hell because they have great controls. Which is phenomenal to see, because you see companies that just have massive bloat internally. That's like the thing Apple doesn't do.
Yeah, that's true. I mean,
And
they're obviously a legit company. They're like the best company ever. So
yeah, exactly. But earnings, like I said, were basically flat. Roughly in line with it, despite, like I said, seeing the kind of headwinds there. They did, part of that is because they were able to buy back shares, so that they have this kind of concentration effect where, despite the fact that they had fewer dollars in revenue, they were able to manage the same kind of EPS because they had fewer shares outstanding. But what I wanted to highlight here is kind of the net sales by region. So, US had a decline. You had actually like a little bit of an increase here in Europe, nothing too crazy. Still a decline in China, and Japan, slight decline. But look at where they're starting to get their sales from, rest of Asia Pacific. 7 to 8 billion. That's like what, 15%
yeah, it's like
almost year-over-year
15-ish.
growth.
Yeah, that's pretty solid.
And that this is prior to them opening their first 2 physical presence stores. I think this trend is going to something we're going to really see to continue, is that certain markets in the US are pretty well, I don't want to say saturated, but mature, if you will. They're not going to have these dramatic growth rates anymore. They're going to have typical product cycles, but they have this very large kind of tailwind with like the kind of Indian economy as it matures, and they're really positioning themselves to take advantage of it. So like I'm really excited about what they're doing in India. And in case you were curious about the market as a whole, I saw this meme on Reddit and I absolutely loved it, where you have Apple and like their performance showing up the entire U.S. stock market.
Yeah, I mean, definitely killed my shorts. I was waiting for that to tank. Here's the market as a whole. Obviously, we've looked at this a couple times. This is the 100 moving average. This is the 200 moving average. When you're in this zone, we have no idea what's going to happen land. Mm-hmm. We got 2 hammers trying to bounce up above this thing. It's really looking quite bullish, at least for now. Qs are even more. So
yeah.
Unless some insane news comes out in like the next 2 weeks, I don't know here. I'm thinking.
It's been earnings season, so I'm going to look at S&P 500 and kind of earnings as overall. We talked about this actually already in a separate video, but I always remember too. You remember Donald Trump calling him Tim Apple?
Tim Apple?
Tim Apple. Had a little stroke. Was that Trump or Biden? Sorry, that was Biden, I think. But earnings season, right? So 85% of S&P 500 companies have reported so far. Revenue growth was coming in at 3.9%, which is the slowest we've had in like 3 years. Not terribly surprising given like the kind of macroeconomic environment that's shifted its wind a little bit. But when you're looking at kind of the earnings, they did have about 2.2% decrease in earnings. Because costs are up. The companies have had this internal bloat where they haven't been able to cut back down and become as lean as they should have been and as fast as they should have been. So you're seeing the top line growth a little bit better than the bottom line growth, which is not totally surprising. Kind of different from what Apple managed to do, but. And then forward PE 17.7, not horribly expensive, kind of roughly in line with expectations.
Kind of a bummer. I was hoping it was going to be like 20.
I mean, I was hoping to get some stocks at some great discounts. Okay, I'm always hoping for that. As far as companies coming up this week reporting earnings, I know Dylan hates these kind of slides, but very busy. Not a whole lot of like major movers on here. Oxy is one I care about because I have a put right now that I sold on Oxy. Nikola, maybe we'll finally file bankruptcy.
You have a put on Oxy? What price?
I sold a put on Oxy, meaning I would buy the shares.
Me too.
Yeah, nice.
60.
Yeah. I think 60 is my strike too.
Yeah.
For those of us who still are in Alibaba, we got a little taste with JD later on the end of this week, and Alibaba is actually next week. But overall, kind of market earnings here. So this is the SP 500, kind of 11 sectors here. And when we're looking at the actual kind of, market overall here, we're seeing earnings coming in like that 2.2%. But that's much better than was originally predicted, 6.7%, which is probably why you've seen the market kind of maintain this optimism throughout this earnings season. Is that it's been coming in, the numbers coming in, hitting the road are much better than we were anticipating coming into this. Okay.
For sure. It's surprising. I do think Nikola is going to throw the market. I think it's just going to be so bad. And, everyone's going to be like, yeah, that's not good.
Yeah.
Bankrupt.
What is their market cap now? Like $15?
I think they're, I close my shorts when they hit like $2 because I was like, all right, I'm at risk for a short squeeze. I think they're at 90 cents. I'll look it up.
Yeah. Well, and then, as far as like the revenue, we kind of talked about 3.9% overall. 1.9% was the kind of original expectation coming into this quarter. So we're talking about twice the revenue growth that was originally anticipated. So, there's reason for optimism in the market, and I completely get that. Now, this chart is looking at the kind of portions of companies in different industries that are reporting above average revenue, earnings growth. And, lots of big sexy green bars here, meaning a lot of industries, a lot of these sectors are doing better than they originally kind of anticipated as far as like earnings goes. And you see that pretty broadly across like multiple different metrics. Same thing with revenue here. And sorry, yeah, that was my last slide. But that's basically the whole idea is that this earnings season has a good idea for being optimistic, and Apple was a little bit of an outlier in that they had a little bit bump down in revenue, but they were still able to deliver earnings. So that's why they deserve to be the king of the hill.
That's fair. This is just kind of funny. This is Nicolo's chart. It's a weekly chart. You're doing really well when there's negative values on the y-axis here. Thanks for watching, guys. We did start a new channel. It's if you look for it, we look at really dark things that have happened. It's kind of scary, but yeah. Thanks, guys.
Pretty fascinating stuff. All right, catch you guys in the next one.